This is the Alternative Investing Advantage podcast from Advanta IRA, where we show you how to explore investments beyond Wall Street and open your eyes to new options for your portfolio. It's time to take control and give yourself the freedom to choose where you invest your money.
Hi, and welcome to another edition of the Alternative Investing Advantage podcast. My name is Alex Perny, and today on the download, we have a relatively quieter, and I use the term very loosely when I say quieter, newsreel when it comes to what's going on in the financial markets. However, there have been a few huge splashes that have occurred this weekend and the end of last week. As of the recording of this podcast, which is April 5th of 2022. Yesterday on 4/4, we had some quite interesting news in the world of tech between manufacturing and actual technology companies, where Elon Musk becoming the single largest shareholder of Twitter, buying roughly $3.2 billion worth of the company's stock, equating to about 9.2% of the entirety of the company itself. Now, this compared to Jack Dorsey, who is the founder, owning roughly about 3% of the company, is a very interesting shift in the ongoing, maybe call it a tit for tat, back and forth between Twitter and Elon Musk, who has been one of the most consumed users over the past few years of the actual platform. So it'll be interesting to see what actually happens with Elon Musk becoming the largest majority shareholder of Twitter, although it is a smaller position and not a majority and not an overwhelming majority position. It will be interesting to see what exactly this does for the company and what direction this actually drives them in going. However, the news of this purchase did have an incredibly positive impact on Twitter's stock. Went absolutely crazy in trading yesterday on Monday, 4/5, and it is now sitting roughly 25% above where it was sitting at the close of markets on Friday of last week. So just an absolute moonshot for the share price of Twitter. Definitely something to keep an eye on going on in the future as well, but definitely the largest news out of the investing equity side of things is Elon Musk single-handedly purchasing almost 10% of Twitter. Another interesting point coming in out of the technology realm and kind of getting into something we haven't covered too much is sports wagering, which has seen a large push since the Supreme Court ruled that it is federally constitutional for sports wagering to occur in the United States. DraftKings stock is riding an NCAA tournament high, as last night we had the end of the NCAA tournament, seeing the largest comeback in NCAA tournament history. So it's kind of an interesting thing to watch last night. But DraftKings is announcing as of this morning that they have plans to expand into Puerto Rico as well. So something to watch, another kind of adjunct to the technology industry, but getting into sports gambling and sports wagering is definitely going to be something interesting to watch out for as this market becomes larger and larger. News out of the West Coast, Starbucks longtime CEO Schultz coming back as the chief executive officer. However, shares are trading down about 3.75%, about 3.72% on the day, as they also are announcing the end of a stock buyback program that has been going on for the better part of a year. So Starbucks seeing some interesting moves in the C-suite level, as well as a dip in share price with the announcement of the termination of the stock buyback program. The Dow seeing a large sell-off in transit-related stocks, mainly having issues to do with the constraints on energy and the continuing ongoing conflict between Ukraine and Russia. So interesting to see that we are actually now starting to see a sell-off in transportation, not simply just in the energy sector, but we're also seeing transportation. And hopefully this does not trickle over into things like manufacturing as well, which do rely heavily on things such as manufactured goods and raw materials and petrochemicals that come out of this region of the world as well. Now, lastly, in manufacturing news, kind of an interesting one coming out of the Middle East, French Aerospace giant Airbus is locked in a delivery dispute with Qatari Airways over service damages to several A350 long-haul airplanes. Now, this started back about a year and a half ago with some deliveries, but now this is affecting over $1 billion in deliveries from Airbus to Qatari Airways. So this has been something where it has escalated from a few small issues to something that now has 3 commas in the price tag. So definitely going to be something interesting to watch, especially when we have things such as sell-offs happening in the transportation realm. It'll be interesting to see how exactly these held up payments and deliveries from Airbus to Qatari Airways are going to affect the aerospace giant in general. So definitely some interesting things to watch. Again, not the most news-worthy cycle for things going on in the securities markets, but definitely some things to watch, and obviously some very interesting things, such as Elon Musk personally buying almost 10% of Twitter. This has been The Download. Thanks for joining us. Today on the what is the an inverted yield curve? Now, a lot of news is being pumped out right now about people looking at a possible new recession or a market correction, and a term you'll hear tossed around a lot is the term inverted yield curve. This is something that has to do with measurements of stability and payment in bond markets. And it's normally one of those terms that a lot of people just kind of glance over and say, yes, inverted yield curve, good or bad. But we all should know, at least on a very basic level, what this means. What is an inverted yield curve? An inverted yield curve describes the unusual drop of yields on longer-term debt below yields on shorter-term debt of the same credit quality. The yield curve graphically represents on similar bonds across a variety of maturities. An inverted yield curve occurs when short-term debt instruments have higher yields than longer-term instruments of the same credit risk profile. An inverted yield curve is unusual as it reflects bond investors' expectation for a decline in longer-term interest rates, typically associated with recessions. Market participants and economists use a variety of yield spreads as a proxy for the yield curve. This has been The What Is. Hi, and welcome to another edition of the Alternative Investing Advantage podcast. My name is Alex Perny, and today I'm very pleased to welcome one of our associates here at Advanta, Reneika Lightbourne, who has been a great asset to us on the Advanta team, working out of our Atlanta office, doing a very similar role to myself of business development, sales, marketing. But an interesting thing about Reneika is not only is she a employee of Advanta, she's also a self-directed IRA investor as well. So we wanted to bring her on and kind of give everyone listening an interesting viewpoint on not only how we at Advanta professionally view what we do, but also someone that has experience in walking the walk of the talk that we talk here at Advanta. So Reneika, thank you very much for being on with us today.
Thank you so much, Alex. It's always a pleasure to connect with you, and obviously the opportunity to be on the other side and talk through from an investor perspective.
Awesome. Yeah. So give us a little bit of background about yourself. I always like to give, a general outline of who we are interviewing. I know self-directed IRAs aren't something that everyone necessarily goes, hey, what are you going to go to school for? I'm going to work for a self-directed IRA custodian. So give us a little bit of background about yourself, where you're from, what kind of got you, to the point that you are here today, a little bit of educational background and the like.
Yeah, absolutely. So I'm originally from the Bahamas. I'm an island girl, but grew up in the Bahamas, went to school in the Midwest, St. Louis, Lindenwood University, small Christian college in the Midwest. Had the opportunity to take full advantage of, scholarships there. And eventually I transitioned to Atlanta. It's, been almost like a second home. So eventually came here and been into like sales and business development and financial services for a little over 10 to 15 years, business ownership, and just I love what I do. have an opportunity to interact with like-minded investors.
Great, awesome. So, how did you initially kind of come across self-directed IRAs? I know, at least from knowing you for a while, it was a kind of an interesting story about how you kind of came across self-directed IRAs, and then to working at Advanta. So, give us a little bit of the background on what kind of landed you within the self-directed IRA universe.
Funny story. Originally, I'd read it like maybe 15 years ago, like in a book. I saw like a term, but kind of went over my head. And then in the 2008 presidential election, it came up, self-directing, and I was like, okay, how did you do that? Okay, I want to learn how to do that, and then someday I'm going to do that. And then about fast forward, maybe 2015, 16, I really, I've always had a keen interest in investing and, anything related to business. So I'm like, okay, well, I want to transition and kind of explore alternatives, outside of the stock market, and got connected with some local real estate investors here in the Atlanta market and joined a real estate group. And I was taking a class and it was talking about self-directing. And I'm like, okay, this is exactly what is it that I want to do. So I, took my time. Usually before I make any investment or make any, major decisions, I really like to kind of, do my due diligence. So I looked around, at other companies as well, but, Advanta just resonated with me just because, good response. It was, here in Atlanta, so I can kind of put a face to a name, but also too, just the fact that, that the concierge style service, being able to, some of my colleagues already had accounts here with Advanta, so it just made sense. In terms of investing, I think I started in 2017 as a client. And then of course, an opportunity came about, I think in 2019 for me to join the staff. I was attending a lunch and learn that we typically do in our in-house, at the time. And the person that normally handles the Atlanta office actually wasn't here. And I'm like, okay, I know I need this office because the type of investment I was doing at the time required original documents. And I was, I wanted to learn more about tax lanes as well. And one of our referral partners was doing a speaking engagement, Chantel Owen. She's talking about tax liens. I'm like, you know what, I'm gonna take Friday off and I'm just go to the Atlanta office. And, the rest is history since then. I had a chance to meet Scott, and, just one thing led to another, and it was an opportunity that came about.
Yeah, it's definitely kind of a unique situation. We've had people come to Advanta from all sorts of different and interesting ways. Rarely are hiring of new associates directly just from like an Indeed. It's always it's one of the more interesting places that I've seen do it. I mean, we have someone like you who started out as a networking and client hire, and then we had someone like me that had a friend that basically worked in the mailroom, 11 years ago when 11 years ago when I started here. Just all sorts of different interesting stories of how people landed here. So, from that perspective of someone that came in from self-direction and seeing the benefit to it, you mentioned tax liens, obviously, is kind of an interesting way that I think a lot of people get exposed to self-direction. Ironically enough, though, I've seen, at least in my career here of doing, sales and business development, maybe the past 6 years of my career, that a lot of people hear about us through that particular avenue of investing, although not nearly as many people kind of do that type of investing. It seems like people will come over for the tax liens and tax certificates and then maybe just buy a piece of real estate or issue someone a loan. That was kind of something of interest to you. Did you ever have any experience in investing in tax liens or doing that? Or, what kind of directions has your career in self-direction, at least the investing side of it, what kind of different places has that landed you?
So my actual first investment was, real estate related. I was doing private lending. I had JV'd on a property in Duluth, Georgia with a fellow Advanta client. We were part of the same real estate group. So initially started out with private lending. Tax lien, tax deeds is part of my strategy. I haven't done one yet in my IRA, but actually that's pending. I'm looking at over-the-counter, tax liens actually in the state of Florida. But my initial investment was real estate related. Usually, from an investor standpoint, and also just dealing with our clients, most people have interest in real estate. It's like the most attractive investment opportunity that they tend to look at, myself included.
Sure. So when you mentioned lending's a really popular one for our IRA clients in general, just because, and again, everyone's opinion, there's as many opinions as there are people in the world, right? So there's billions of these things out there, and which ones are right, who's to say? But when it comes to investing in real estate with an IRA, there definitely is some, credence that needs to be given to issues of liability. You buy a piece of property, the owner's liable essentially.
Alex, you're freezing up. You just froze.
Anything ever were to happen. Did my screen freeze?
Yeah, you're still frozen. Okay, it just came back.
Yeah, that's my nice computer screen issue. All right. Back up a little bit so they can do the cut. So investing in real estate has its own set of issues, namely with liability. So someone investing with an IRA maybe doesn't want to hold the real estate directly. So private lending becomes a really popular option. Not to say that we don't have hundreds of millions of dollars worth of real estate in custody for our clients, but it's something that pops up from time to time. So lending is a very popular way for people to get invested in real estate or control real estate without that layers of kind of liability or other issues that go into it. Now, that's at least just kind of my take on it. From your perspective of kind of that being your initial foray into self-directed real estate investing, what were some of the big driving factors? Was it mainly just who you were networking with, what they were doing? Was it a particular aspect of actually lending money out of an IRA? Just, again, give us kind of the 30,000 foot view of, what drove you into the direction of doing that. It can be something, really in depth, or it can be something as simple as just, hey, the person next to me was doing it, so I decided to give it a try.
It was a combination of, all of the above. The person I was actually investing with or JVing with, we have a really good relationship. We're part of the same network, so the trust factor was there. And then also to just, being able to, I can, physically go and put my eyes on the actual property that we were partnering on. And my target was specifically transactional lending, so I can kind of turn it around a lot quicker. So, for example, maybe take 25,000 and, lend it out for 3 months and then repeat that for, 4 times in a year. So that was my initial strategy with that, just because I know they were doing, they needed that additional capital for the strategy they were doing. So it just worked well. I still actually private lend with that particular investor. And that's the thing with, lending or being the bank. Once you find, quality people you can work with, you obviously over time, you get comfortable in terms of knowing what works for you, and as well as the particular investor that you're partnering with. And we have a really good working relationship. So that's been my forte. Keep that private lending, turning, and then of course I've expanded since then into other assets.
Yeah, that's a really good point that you bring up, is, the aspect of comfortability and the fact that you have done repeat deals with this individual. And that's really kind of a common thread that we hear a lot from different investors, especially in our world of investing. And that
No
goes
maintenance.
Yeah, it's repeat business and trust. An individual named Pete Fortunato, who is a very large name in the self-directed and real estate investor network fields. And if he's listening, or anyone that knows him very well is listening, I apologize if I get the number wrong, but his number is that over the past 40 or 50 years of his investing career, he's done, I think it's several hundred deals with only 15 different people. It's that, kind of bond and trust that you really need to have in self-direction, because what you lose from investing in things like the stock market, where you have large regulatory bodies, and who's to say how good of a job that they're doing anyway, because you always hear about issues in the stock market every day and how wildly things can fluctuate. You have some additional eyes looking at stuff. When it comes to self-direction, you have to be comfortable with that person that you're investing with. You have to know them and, really make sure that it's a good fit on not only the transactional level, the personal level, and making sure that it meets your criteria. So it's cool that was kind of your first foray into it, is that, you had met some people through different activities that you were doing, kind of a boots on the ground approach, became comfortable with them, got to know them, and have done repeat deals with them that has been, obviously has been successful enough for you to do repeat business with them. We don't need to get into the specific numbers or anything, but, obviously it's been good enough for you to do it again. And that's it can be that simple is what I'm trying to get across to people in listening to this, is that, this stuff doesn't need to be as complicated as a lot of people make it out to be. It can be as distilled down as kind of your first experience, and you can go from there. And we're going to get there in a second, because I know you've done some other real creative stuff with your IRAs. It's just the person that you meet at a networking event. So I encourage people, get out there. If in the current climate you're not comfortable getting face-to-face, a lot of these things are still on Zoom. A lot of them are free. A lot of them are very cheap if they do charge. So get out there, meet people. This is where people are making turning cents into dollars and turning dollars into everything else, that extrapolation. That's where they're doing this kind of stuff. But you have something to say?
Yeah, I was going to say, like, literally just, getting out there, your circle of influence, or, the people in your network can be the person you do a deal with. And that's how I originally got started. Also too, I do want a preference to, regardless of how big or how small your account is, it doesn't matter, just get started. That's what I typically tell, like, when I'm just talking about investing, like with self-directing, just get started. Your account can be, whether it's $1,000 or $1 million, you're in control, and you can be as creative as you need to be with your account. So when I transitioned from my corporate job, like my B2B job, I decided, like, okay, well, let me give this self-directing thing a start. And I just, moved a portion. I didn't move my entire account, and, just kind of got started with that. So again, just get started.
And that's the cool thing about, if you're dealing with people that self-direct, unlike outside of an IRA where, people can inherit a lot of money in their families. If you look at everything, inherited wealth is a big thing. So people can definitely start out with a lot of money, and start out in a lot different place that you can. But the cool thing about IRAs is that if you meet someone with an IRA, pretty much everyone is kind of started out from, unless they have a big inherited IRA, which we won't talk about, but for the most part, people don't have those, and the rules regarding those have really tightened up over the past few years. But if they're investing with an IRA, everyone's kind of started from the same starting point, of their professional career, with 401k contributions, with IRA contributions. So, don't get discouraged. Just because someone might have $1 million IRA and they've been creative with deals, so they've done very well for themselves, they started pretty much from the same place you are. You can't just plug in $1 million of your personal wealth and do an IRA. Everyone's kind of starting from that same starting block. They're running the same race with these accounts. So if you're, networking with people, and you've talked to someone that's done deals, and you see how their accounts have grown, use that as a benchmark, study that, because, everyone in this industry of doing IRAs and qualified plan investing, it's kind of cool that they've all started from the same place, and you can see how these things what has worked and what has not worked for different people. So that's kind of a cool thing that you bring up, is that no matter what size of account that you have, don't get discouraged. Just because someone's buying a $250,000 piece of real estate, or is funding $1 million tape of loans at a time with their IRA, doesn't mean that you can't get there too. And
exactly,
probably a lot quicker than you think, when you're not having to pay taxes on any of this money as well, which is a really cool part about what we do. Is, the government's giving us a playbook on how not to pay them taxes. Let's use it. So going from your initial experience in lending, and obviously the great relationship you've cultivated there, give us an idea of some other stuff that you've kind of branched out into, or some other stuff that's of particular interest to you. Maybe some stuff that you are doing, and maybe some stuff that you're still looking to maybe get some more information, or just haven't done yet. So I'll let you kind of branch from there.
Okay. Yeah, I've had the opportunity to kind of branch out and invest in some other things that are of interest to me. Like for instance, precious metals. Like, I think I got some precious metals in my account like maybe 3 or 4 years ago. So I'm really happy in terms of, compared to what I got it for, 4 years ago, 3 years ago today. So I'm happy with that. It was just more so, a hedge. It wasn't really to garner significant wealth, but it was a good place. So I'm happy with the return on those precious metals. And then of course, I really love digital assets, cryptocurrency. It's something that's very near and dear to me. It's like one of the, I guess, the first new asset class since the 1600s. So I'm like, okay, if I can replicate, before I put any investment in my IRA, I typically, kind of get familiar with it personally, and then replicate something very similar in my IRA. So with cryptocurrency, I don't have a lot of digital currencies in there in terms of different, coins, but the few that I do have are quality projects that I believe in. So that's something I'm definitely kind of wanting to build upon. And then of course, I think my last investment was a private equity into a private company here in Georgia. So I'm really excited about that. But yeah, just kind of mixing it up in terms of digital assets and private equities. But I do have something on my radar that I've been kind of playing with for a couple of weeks, a couple of months, just to kind of again perfect it personally before I replicate it in my IRA. And then of course I have to reach out to operations to see if they would allow me to do it. That's one of the things I really love about working here. Like I have something I want to do in my IRA, and I reach out to operations. They're pretty responsive and allow me to kind of work through that.
Yeah, no, we definitely like to promote walking the walk of the talk that we talk. So it's great. I'm really happy. It's one of the things I really enjoy about having worked here for as long as I have, and seeing what we do and how we try to not only help our clients, but help our employees to become more financially secure as well in that aspect. So let's rewind this a little bit, because you brought up something interesting about trying something personally before you do it in your IRA. Because one thing, and for people listening to this particular podcast, some reasons that you might want to do that past just wanting to try something first is that, you get the benefit of, let's say you do something and, just like with everything in life, maybe you're not the best at it in your first crack. Maybe you have a few stumbles and you learn a few lessons. The nice thing about doing something personally is that if you have a loss or you don't do as well on something, and you have, let's say, an appreciable net loss on like a tax lot of something, or just, you just in some form or fashion didn't go as well as you planned, you have tax tools that allow you to maybe write off that loss or potentially reduce your taxes on other income you've earned personally by doing that personally. The unfortunate part about IRA investing, and there's not a whole lot of them, but not everything is a perfect scenario for you. So you don't get to write off losses in an IRA personally. If you lose money, if you bought something for $10 and you sold it for $5, well, sorry, you lost half your money. There's really nothing you can do. It just is a loss to your IRA, which kind of couples with one of the benefits of that. Since your IRA doesn't file a tax return, none of the income that you make in your IRA. So if, let's say, that same $10 investment went up to 15 or 20, and you either made a 50% or a 1x or 2x return on your money, you also don't have to pay any taxes personally on that, and you don't file it personally. So when you say doing something personally, at least getting your feet wet, I think that's a very good point to drive home to people, is that if you have the ability to do so, trying a few of these things out personally. Now, obviously doing something like lending someone $25,000 on a real estate project, you're talking about a little bit bigger dollar figures, a little bit harder to do that and kind of pick and choose. But things like cryptocurrency, especially, or maybe tax liens, things like that are definitely a lot easier to do, because you can buy much smaller portions and then maybe just extrapolate your strategy to doing that, more successfully on a bigger scale or with other monies. Is that kind of how you approach that? Was, baby steps and then, applying a scale, or were there some things that you learned that might be of benefit to other people? Obviously, again, not getting into specifics of the things that you maybe actually purchased, but some maybe good generalizations, especially for cryptocurrency, because it's so popular right now, of some things that maybe you learn that might help other investors, or some tools maybe that you use, or websites, resources or things like that might help someone that wants to get more information, or try to invest in the digital asset space that you've learned along the way.
So my initial thought process was more so from a risk assessment or risk mitigation process, in terms of trying it out first, perfecting it before I take that risk of replicating something like that in my IRA. For instance, going back to the private lending, the particular person investor I worked with, we had done like 5 or 6 deals personally before I actually, decided to do that type of investment with them in my IRA. In terms of, the risk assessment I'm looking at, is it, something that's external, like, hey, I have no control over it. Like, okay, obviously we see what's going on in the market today, or just globally, just taking into account, okay, what is my strategy, worst case scenario, or if it's something that can be prevented. With digital assets, I like to say digital assets in my IRA, because it's a long-term hold. I don't trade outside of my IRA for cryptocurrency, just because I don't have the time or bandwidth. But if I were, it would, I would definitely look to kind of mitigate my loss. So one of the crypto, I won't say which particular crypto I got, but I got it at 6 cents in my Roth IRA, and it's now like $2. So again, I'm happy with that. But before I actually purchased it in my Roth IRA, I was holding on to it, doing my due diligence just to make sure I'm not a technical person, but just to kind of make sure I have a complete understanding of, what this particular asset is, and, does it solve a real world problem? And, once I was comfortable enough with, kind of, poking and prodding, I was able to purchase it in my Roth. In terms of resources, I was able to, just do a lot of reading, just kind of stay plugged in terms of, what's going on in the actual crypto space. With my IRA, once I narrowed it down to like the 3 or 4, cryptos I wanted, I was able to work with our amazing staff, and they helped me, especially my account manager, to kind of make it as seamless as possible.
Yeah, absolutely. And you bring up a really interesting point that I want to maybe elaborate a little bit more on that I never really thought of, but I think is a wonderful way to look at, is that a lot of cryptocurrencies, for lack of a term, serve no purpose. They are out there to just try to make some money on some hedge investment, and really there's a nice, like I say, a very accurate term that I won't use on this podcast, but blank coins that are out there. And they really, again, don't serve any purpose except for to try to, in some form or fashion, just make a quick buck. But you brought up the point of, does it solve a real world issue? And I would say that, from some of the very early coins out there, I'll use Bitcoin for an example, that obviously solved the real world issue of a digital currency. It's like there was none. I mean, there were some stabs at it, but this was the first main adopted cryptocurrency we have. So it solved the real world issue of a new form of payment and currency out there for a digital platform. And then there's other ones that come out. So you have things like digital contracts being really instituted and utilized by things like Ethereum. You have real world issues with payment privacy, maybe like something like Monero or something else like that. So you have real world problems that are being solved by some of these different cryptocurrencies, and things that they're aiming to do, like Ethereum, smart contracts, all that kind of cool stuff. Are there any big particular things that you would tell people, hey, do some more research on this, because it's really cool on how cryptocurrencies can operate in these different areas? And a lot of cryptocurrencies operate in simultaneous stacks. So you'll have everything that kind of operates on the Ethereum backbone, or you have stuff that operates on the initial like blockchain of Bitcoin, or other different types, or Ripple is a new kind of one that's out there as well. So what are some things that you've seen that you think maybe are cool in that aspects of some stuff in the real world that has been solved by cryptocurrency? And again, maybe not specific to necessarily what you do, but maybe some things that you just find interesting.
When I do my due diligence, I think I had touched on this in a crypto webinar that I've done with you or Clay. In terms of what I look for, I'm looking at, who are these, companies aligned with, like which big brand or name brand companies that are, kind of putting their brand, or aligning their brand with, a certain digital asset. I'm looking to see who are the team, who are the people that's building out, a particular, blockchain or cryptocurrency. I'm looking to see, is there scalability in terms of real world? For example, like, okay, for me, I'm originally from the Bahamas. That's, if I wanted to send money or wire funds, if I do it, via, the SWIFT system, it can take forever. Whereas if I can send my sister, a digital currency and she can convert it, that's, that solves a personal issue for me. So just kind of looking at, what cryptos out there that you're personally interested in, or you have, that can provide a solution to something that may be personal to you. Something else I'm looking, I haven't purchased it yet in my IRA, purchased it personally, but looking at, metaverse, different metaverse coins. Again, I'm not a gamer, but again, looking to see what real world issue or, service it can provide.
Yeah, absolutely. And as much as people kind of maybe turn their nose up a little bit to metaverse and things like that, some of this stuff has been around for a very long time. With regards to, there's a game out there called Eve, and one of the largest in-game transactions for a particular like video game purchase ever happened in that game like 5 or 6 years ago. It was hundreds and hundreds of thousands of dollars, and it's like a sci-fi game. It was for like a city ship, kind of, if anyone's ever seen 2001 A Space Odyssey, kind of like the space station kind of thing they were on. So this kind of stuff has been around for a long time. Do I get it? Not necessarily. Is it something I really want to dive too far into? Probably not. I'll stick to my lane. There's definitely, like you mentioned earlier, there's bandwidth. I got to be able to do my job, deal with do family stuff, and then have enough bandwidth left over to focus on making some money. And the metaverse, people can make money at it, fantastic. But that also kind of functions, and maybe segues a little bit into something like NFTs, and that more of that kind of realm is built on the NFT space. And it's not something that I necessarily know a whole lot about. Is that anything that you have much experience with in the non-fungible token space?
And not enough to kind of really, speak intelligent enough to like say I want to invest in it. It's on my radar. I've been, kind of researching. There's some NFT platforms that I've looked at, but nothing concrete to say this is, an investment I would want to. But I definitely think it's. I wouldn't say it's a fad, even though it's sometimes associated with it. But I think it's going to have some type of longevity, just because you see, again, big brands out there that are creating, NFTs or, building out solutions related to NFTs. And with going back to real estate, there's a company that, sold a property using an NFT in Tampa. So property, I think. Yeah.
That property is,
yes,
as a crow flies from my house, like just a hair under 2 miles, just directly south from my house. So I walked my dog by that house, ironically enough. And I was like, oh my God, they saw, I don't know necessarily how they did. What I'm assuming happened, and I have, again, bandwidth, I would assume that they, probably sold it for $1 of fiat, and then, something was done through it, unless you know more about it.
It actually sold for like 600,000. From my understanding, typically like an LLC would own the NFT, and then whoever's, buying the property would just buy the LLC. That's, actually an NFT. I may be missing some details, but I think high level, it's, the property is in an LLC, you buy the NFT, and that's how you acquire it. But the property actually sold for 600,000, which is, pretty significant.
Yeah, it's right down the road in a neighborhood called Gulfport, just right south of me here in St. Pete. So yeah, it's really cool. It was an interesting thing. And there's a condominium development up in, I think, Polk County. It's kind of north end east of where I'm at, that's doing several of them on an NFT basis. So it's cool to see that it actually is something that's being done. I think one of the first transactional like real estate purchases using cryptocurrency was also in Florida as well. So it's really cool to see that kind of adoption happening, and that further kind of cements, again, looking for real world issues that are being solved. I don't know what particular issue that selling a house on an NFT solves, except for proof of concept. And again, I need to do more research on it, but it is going to show that if someone's willing to put, a tangible piece of real estate up against a technology platform like NFT, that's real world dollars. That's something you can reach out and touch.
Yeah, and I think with blockchain technology, like, okay, for instance, if you buy a property, you got to do title search, title insurance. Well, if it's on a blockchain, that kind of helps with, accuracy, but also too quick turnaround time in terms of speed of transfer. So that's one use case, but the technology is still relatively new in terms of evolving. But I think in the next, 10, 15, 20 years, we're going to see many different use cases for blockchain, NFTs, metaverse, various type of, utility tokens and so forth.
Yeah, absolutely. I'm a firm believer in the blockchain. Cryptocurrency is fantastic, but the real thing that gets me excited is blockchain technology, on how that can really help. And forgive me for sounding a little bit, I don't know, maybe singing praises, but really change the world in a fundamental way of issues that are seen with things like title, like issues of title, especially in real estate, fraudulent payments and, verification of deposits and all sorts of things that you see in issues in traditional banking and non-standardized systems across the world. Because like you mentioned with, sending money to the Bahamas, and my dad used to do a lot of international business and travel as well. It might be quicker if you literally get on a plane in today's day and age, get on a plane with a duffel bag full of cash or gold or something, fly to that other country and give someone money, as opposed to all the other instantaneous things that we love, like online banking, getting money across a border. And the Bahamas, the closest Bahamian island to the United States is Bimini, and it's like 70 miles off the coast of Fort Lauderdale. So, you can be there by 3 hours in a boat, and you still take maybe a better part of a week to send money through Swift to get there. And just, things like that can really be fundamentally changed by some of this technology. And, the sky's kind of the limit for how well this stuff's going to be adopted and how much money people can make, in doing this. And again, you mentioned we're still kind of in its infancy, so research is key, but there's a lot of upside to some of this stuff. There's a lot more room for growth. You hear about people, buying Bitcoin, back in 2012 could have, made 50,000 their X on their money, but maybe there's not so many unicorns like that out there, but there's still plenty of meat left for people to eat on this.
Absolutely. Like I said, I got a crypto for 6 cents and it went up $2. I mean, I'm really happy with a return like that. One of the investments that I've been kind of working on before I again put it in my IRA, I'm looking to buy personally I have a masternode, so I'm looking to okay, how do I replicate that in my IRA to make it make sense to where again it's going to work from an operational standpoint. So buying a masternode is almost like similar to staking. So that's something that's on the radar for me.
Now, I honestly, you just brought up something I don't think I've ever heard of, which I am super excited to hear about new things on this podcast, which doesn't happen often, but I'm excited that it did. What is a masternode? Give me the crash course. What is that?
So you have to have X amount of, a particular coin in order to be considered a masternode holder. So you're just more so supporting the actual blockchain itself as validation. Again, it's just, you have the ability to earn rewards or earn additional, crypto or digital asset based on, supporting the actual blockchain itself. And there's, different cryptos out there that allow you to purchase masternode. So I'm working through to see which one makes sense for my IRA, which platform is going to work to host it in the IRA, because I don't want to do checkbook control. I've been fortunate to where I can do everything in-house, and that's one of the reasons I love, being a client of Advanta and working for Advanta. Again, operations work with me when I want to do quirky investments like that. So it's just when I presented, okay, this is something I want to do in my IRA. I want to have all of the steps outlined in terms of, this is the masternode I want to, purchase. This is the amount I want to purchase, and then of course, how to maintain it, just so it's almost like passive income staking. You earn interest on, supporting the actual underlying blockchain.
So it's kind of maybe for maybe just and this might be kind of missing the mark, but is it kind of like an evolved aspect of mining, of verification and stuff like that, or is it a little bit too different to make that analogy?
No, for simplicity, that's spot on. Let's just say to be a masternode holder of particular crypto, you have to have 1,000 coins, and then you lock it up in a sense to support the actual blockchain, the actual ecosystem. And then because you're helping with validation, you earn additional cryptos over a certain amount of time. Okay. So I'm thinking long-term, big picture in a Roth IRA passive for the next 5, 10, 15, 20 years. Over time it builds up.
Yeah, absolutely, definitely an interesting thing. Now, again, if you were to point some people in a direction to learn more about what a masternode is, myself included, when I eat my lunch here in a few minutes, I would like to poke around some more stuff. What are some good resources for people besides just, getting on the old Google machine and typing in masternode? Are there some good resources out there that you enjoy, that you find, more often than not are good quality information? Obviously anything you have to sift through and validate yourself, but just some good things for people to look at if they're interested in learning more kind of on this aspect of cryptocurrency.
Yeah, absolutely. So obviously there's a lot of different platforms out there. You can Google as well, but YouTube is a good resource just to kind of get familiar with what it is, how it works. But then if you actually want to purchase a masternode, the one that I personally use is allnodes. Just, type in allnodes.com and kind of browse around, play around, kind of explain, your options, what's available, and the rewards you can potentially get. There's another one that I use too, but I use to kind of research, but I haven't purchased on that particular. But allnodes is the one that I've used.
Okay, great. From to kind of springboard to bring this a little bit in for a landing, you mentioned, and it's really cool to see the variety of stuff you've done with your IRA. I mean, going from lending, someone on real estate to buying something as, basically one of the first things that had inherent value besides land. First there was land, and then they dug up the gold or the silver and then put value against that. So basically you have like the two most ancient assets, if you will, in your IRA, going from there to maybe some and you've evolved into buying some of literally the most cutting, bleeding edge assets that are coming out now. It's just such an interesting thing to think that, you've gone from one place to another. And the fact that you've been able to do all this through an IRA that the government doesn't get to tax. That's the other cool part about this, that you've gone from, the oldest of the old school to the newest of the new, all through the same vehicle of self-directing an IRA, and being able to do it all under that same umbrella is, again, I work here. It's in my financial best interest to think this stuff is, to, tell people this stuff is cool, but I truly do believe that's really cool. You go to JP Morgan, you go to Chase and say the same kind of thing. And, you get looked at and be like, hi, would you like to buy this treasury bill? Would you like to buy this mutual fund? It's just cool that this stuff is even available to, regular everyday investors like you and me and everyone else out there. But with that said, my shameless plug of one, what we do here at Advanta, and two, the fact that I think the stuff is really cool. Are there any other things that you're maybe looking at that you think are interesting as far as where you might want to go next with your self-direction, or are you just kind of trying to be a student of the industry and wherever it goes, it goes?
And from an investor standpoint, I'm looking at tax lien and tax deeds. The purchase of tax lien outside of my IRA in Georgia, but I'm looking to now, I'm building up my cash reserves specifically to target certain states. Like for instance, Florida is my number one in terms of tax lien, tax deed investing, just because you get that 18%. Texas is also on the radar because of 25%. And then there's another state that I'm doing my due diligence on. But the reason I'm shifting more so to tax lien and tax deed, like nothing is guaranteed. There's always risk with every investment, but just because of what's going on, the global economy, just world events, I'm looking to kind of, again, mitigate my risk in a sense. So tax lien, tax deeds, there's an opportunity to, get your interest return or end up with a tangible asset. So I'm just focusing on that and looking at more so over the counter. Again, time bandwidth is very restrictive. So if I can purchase over the counter and then still be able to implement my strategy, that's going to be my next move. But I do want to emphasize, even though I work for Advanta, I'm speaking from as a client. I wouldn't be able to do the things that I've done in my IRA without quality service. And from day one to now, I receive nothing but the best type of service from my account manager, and obviously operations, again, when I'm kind of pulling around. So I do want to just say, hey, if you're interested in self-directing, if you just have concerns about, there's no pressure from us. For me as a client, it took me 6 months to open up my Advanta account. I kind of ping pong between, Ellen and one of our former colleagues, but it took me 6 months before I, opened up my account. There was never any pressure. Advanta's always been, here as a resource, educating. And then of course, once you are a client of ours, you get, the best service. And I've experienced that both as a client, and obviously now I get to hopefully provide that to our clients.
Yeah, absolutely. Granted, full disclosure, you have two people that work in sales on this podcast right now for the same company, but I wouldn't be doing this for as long as I would. And Reneika certainly wouldn't have started out as a client and then becoming an employee if we did, actually somewhat believe what we're saying. I try to joke around a little bit, but I truly do believe in kind of the service and the product that we put out. And to kind of, again, always good to plug what we got going on, but just to kind of touch on the tax deed and certificate issue that you brought up. Definitely one of the first investments I ever did for a client back when I started in 2012 was buying tax certificates. That was really cool. I never had heard about it. And to give people a general idea, if you haven't ever heard, a tax certificate essentially is where you go to a particular county and then you buy the right to collect on a particular delinquent tax bill. You don't get anything except for basically the right to collect that at a certain interest rate. And when they pay it off, that debt goes away and their tax obligation is absolved. You know, they pay their tax bill. You've basically bought an account receivable from that particular county to collect on. And then most states pegged it at a certain percentage rate. Like you said, Florida's like 18%.
Yes.
Texas, you know, there's something like that, 20. So you have the potential to make some good money. And the reason that these are deemed a little bit safer of investment is most people don't want to lose their property by not paying taxes. So the motivation for people to pay these is pretty steep. Now, tax deeds are the other portion where you're actually buying a right to foreclose the property, you know, not just the bill, but now you're buying the right to foreclose. And then, you know, settling any title issues and everything like that. Not to get in, because that's a whole class in and of itself. Is there one area that you're looking at more than the other? Are you kind of agnostic to which direction you go as kind of where you see the value? Which one is a little bit more interesting to you as the investor? Is it the tax deed side or the tax lien side? Or sorry, is the tax certificate side or the tax deed side?
So my strategy for interest return, obviously Florida is attractive for that 18%. So if I'm looking to get interest return, I'm targeting Florida specifically for that. For deeds, I'm targeting like let's say a state like Michigan, because it's a tax deed state and you can possibly have the opportunity to acquire property outright and, maybe turn it into a rental. So I'm looking at specific markets for very different reasons. Like Florida is interest just because, typically within 90 days or so, 120 days, it's most likely that the property in Florida is going to, the tax, the property owner is going to pay. So you get a chance to get that interest return. Whereas, a tax deed state, if I have the chance to win a bid and I can take possession of that property, pretty quickly and turn it into a rental. So that's my strategy, looking at different markets for very, precise reasons.
Yeah. And tax deeds, people, they're very kind of old school investment. People have been doing this stuff for a long time. As long as people have been buying real estate, governments have been taxing it. So, it's something that's been around for a long time. And, I get asked a lot, Gleason, and I'm sure you get asked this too in the course of meeting with people. It's like, oh, well, what's a really good deal that you've seen? Or like, who made the most money on a particular deal? And the funny thing is, in my career here, the most money I ever saw someone make on a deal was on a tax certificate, a tax deed. It was in DeKalb County, Georgia. So right in your neck of the woods up in Atlanta. They bought they were bidding on tax deeds at auction. And the funny thing is that, and this is the last we're bringing in for a landing, but it's kind of cool to show that, we're talking about, you had a cryptocurrency that, did extremely well. And we hear all these things about people becoming millionaires and billionaires of cryptocurrency, but this guy on one tax deed knocked it out of the park. And again, to disclose, this is not a normal return. We don't see this all the time, but it happened. I saw the paperwork. We saw the wire. It was pretty cool. So he was bidding on this tax deed. And in this particular county in Georgia, you have to be present at the tax deed auction with cashier's checks in certain denominations you can't go over. So we get the date of the auction. He'd think he'd know the approximate amount of the sale. I'd have to get cashier's checks in like 50, 25, 10, $5,000 denominations, ship them up there early AM delivery for him to go do this. I think just in shipping and cashier's checks and return charges, it was like almost $3,000 from us just in fees that we were having to charge this guy. Then for quieting the title on the tax deed, so getting rid of other like liens from municipalities, mechanics liens, all this other kind of stuff, getting rid of all that was another, say 20, 30 grand in fees. So call it 40 or 50 grand in on just getting the issues with the deed to where you could sell it and get a warranty deed on it. Then I think he bought it for like 40 or 50 grand. So all in, he was like 110, 120 into the deal. Sold the property for a little bit more than north of $1 million after he did all this through an IRA. Or maybe it was like 800 something grand. It was wild. It was something I didn't believe until I saw it. I heard the guy telling me, he's like, oh, here's what I'm thinking about selling it for. And, you know, people have expectations of things, and I wish no one but the best in meeting those expectations. But sometimes when it comes to how much money people make, things get over exaggerated. This one was not. It was the biggest single return I ever saw on an investment was a tax deed in DeKalb County, Georgia. So
that's pretty impressive. I mean, I'll take that all day, every day.
Yeah, again, that's not normal, but it just goes to show that, you know, you don't have to become an expert in something as cutting edge as cryptocurrency to make a great return. If you understand something fundamentally and you get in there and you do the research, you put in the work, whether it's tax deeds and real estate, mortgages, precious metals, or even stuff like cryptocurrency, you can make a lot of money by doing things in areas that you're comfortable and you understand. So just like to put that out there, because we focused a lot on this conversation about new stuff like cryptocurrency and I already forgot node. What kind of node are you talking about?
Master node.
I've never even heard of that before. So, I mean, there's stuff people are making money on that is that new. So just wanted to kind of bring it in, you know, to kind of make sure people understand there's a lot of different ways to make money with this. And of course, the cool thing about any of this stuff is that we're talking about in this context, you're not paying any taxes on it. So
exactly.
Even cooler. So Reneika, I'll let you kind of sign off. Do you have any events or anything else coming up that you'd like to plug? And also if people want to get in touch with you in the Atlanta area, how do they get in touch with you specifically in Atlanta if they're interested in self-direction?
Yeah, absolutely. You know, definitely go to advantaira.com, schedule a consultation, or you can call me directly at 678-513-8913. We don't give tax, legal, or investment advice, but I really enjoy talking to our, prospective clients, our clients, talking through their scenarios. So I'm happy to, help facilitate with your questions relating to self-direction.
All right, fantastic. Well, again, thank you very much, Reneika, for being on with us today. This has been another edition of the Alternative Investing Advantage podcast. My name is Alex Perny, and I hope everyone has a great day.
Thank you for tuning in to the Alternative Investing Advantage podcast. Tune in next week for more investing tips and strategies.
Want to hear more episodes of the Alternative Investing Advantage? Search podcast at advantaira.com and subscribe.